Dividends decreases it. So that means that when you have a revenue is going to increase stockholders' equity. Why? Let me walk through the logic here. Revenue increases profit. Profit belongs to whom? Who does the profit belong to? Stockholders. So if you have a revenue, that increases your profit and it goes to stockholders. If you have an expense, that decreases profit and it comes from your stockholders. See, so revenues go into stockholders' equity, expenses come out of stockholders' equity through retained earnings. So now look at this. Revenue, expense, and dividend account data recorded in retained earnings. Retained earnings are increased by what? Net income or dividends? Net income, and they're decreased by what? Dividends. Therefore, if Doogies provides dog grooming services for $20,000 cash, that transaction, here's the easy part, affects cash or accounts receivable. Cash. And it also affects revenues or expenses. Revenues. Because revenues, does revenue increase or decrease net income? Increases net income. And net income, how does that affect retained earnings? I'm going to just tell you this is retained earnings. Net income increases retained earnings, then the revenue is listed under retained earnings. So watch what we do over here. Oh, it's going to be later on. Here we go. So provides dog grooming services for $20,000 cash. You're going to increase revenue for $20,000, which is going to go in your retained earnings column. Why? Because revenue increases net income, which goes to retained earnings. I'll make this a little smaller so you can see the whole thing at once. And where is the other piece of this? What other account is going to be affected? Cash. Cash is also going to be increased by $20,000. So this business started in July. The chart on the following page lists 8 events. For each transaction, indicate which accounts increase or decrease and identify the amount. So let's finish this before the break, and then we'll go over it after the break. And I'll do the first one with you. So they purchased a grooming table and other equipment for $18,000 cash. So what accounts are going to be affected here?
Cash.
Cash. How is cash affected? It's going to be negative $18,000. I'm going to use an accounting convention here. I'm going to put it in parentheses indicating negative. What other account is going to be affected?
Other assets.
Yeah, other assets. I'm going to make an account called equipment, which will increase by $18,000. Because you got to keep that balance. You see how it's going to affect 2 accounts? Now, I'll give you one, if you're wondering, like, because this is, by the way, this, what I'm doing today, this is where a lot of students get lost. So I'm talking louder than I normally talk. But I think it's pretty interesting. Anyway, what you're going to do here is, there's really 2 questions you can ask yourself as you look at a transaction. One, does this affect cash and how? Because that's a real easy question. Either you're receiving cash, or you're paying cash, or there might be no cash involved at all. So first thing to ask yourself is, that's a Clint Eastwood line. You got to ask myself, do I feel lucky? First thing to ask yourself is, cash. Is cash increased or decreased, or not affected? So purchase a grooming table and other equipment for $18,000 cash. I'm paying $18,000 cash. And then the next question is to see what other accounts are affected and by how much, and to fill those in one by one. So fill in the chart here, and then we'll go over it, and then we'll take a break. Okay, so let's look at this. Doogie purchased a one-year insurance policy for $2,400 cash. So I gave you half the transaction here. This asset called prepaid insurance increased by $2,400 because what they're doing is they're purchasing the policy and then they're going to work off, they're going to use up the policy during the year. That's kind of the thinking. What other account is affected here? Cash. Cash is going up or down? Cash is being paid for $2,400. And again, you can see this equality of assets in the first two columns is still always equal to liabilities plus stockholders' equity. Doogie ordered, you were increasing one asset and we're decreasing the other asset. Doogie ordered doggy treats and other supplies totaling $1,200. What accounts are affected? The silence is really good. No accounts are affected. Right? It's not a transaction. So silence is correct. The doggy treats and other supplies arrived along with the bill for $1,200. Now, what accounts are going to be affected? First question, what happened to cash?
Nothing.
Nothing happens to cash because we didn't pay for this. So what other accounts would be affected here? I'll give you a hint.
Payable.
We went over this account about an hour ago.
Inventory.
Right, inventory. I'm going to call it supplies inventory. It's not really inventory. It's kind of a different. Supplies inventory isn't merchandise inventory because we don't sell dog treats. We sell dog grooming. But we'll call it supplies inventory, and that increased by $1,200. And what other account is affected? What? Accounts payable by $1,200. Accounts payable goes up by $1,200. Now you say yourself, before we were adding and subtracting, right? In these other things here, we add one, subtract the other. Here I'm adding both, but that's okay because I can add an asset and add a liability, and the equality between assets and liabilities and stockholders' equity is still going to be the same. My balance between assets and liabilities and stockholders' equity cannot be ruined. Doogie's provides dog grooming services for $20,000 cash. We did this before. So we receive $20,000 cash, cash goes up, and revenue increases retained earnings by $20,000. This next one is a little tricky. Paid employee wages of $2,000 and rent of $1,500 for July. So first question is,
Index cash.
what happened to cash?
It decreases by
Decreases by how much?
3,500.
By $3,500. What other accounts are going to be affected? But we're paying things here. There's no, well, how would accounts payable be affected? I'm sorry. Is there a liability that I'm paying off?
Yeah, aren't you paying their salaries, which is the liability?
But right now I don't have any liability for their salaries. Look at my accounts payable here. The only liability I have so far is the doggy treats I have to pay for. So far I don't really owe anyone any money. I guess it's the end of the month, so now I'm gonna just pay them. I would have a liability if they did the work and I haven't paid them yet. But it's the end of the month, so I'm just recording the work and paying them at the same time. You know what I mean? You're like a chapter ahead of us. You're making it more complicated than you have to. So this is just wages expense. It's wages expense of $2,000, and that decreases retained earnings. And the other thing that I got is I got rent expense. That also decreases retained earnings by $1,500. So again, you could see the equality here. I'm subtracting $3,500 from the left, and I'm subtracting $3,500 from the right. No one said I can only do 2 accounts. I said I have to have at least 2 accounts. But you can have 3 accounts in a transaction, or you can have 10. Doogie paid a $400 cash dividend to shareholders. What happened to cash? I'm paying cash, so cash goes down. And what other account is going to be affected here? What other column, I should say? Retained earnings for the dividend. So I have dividends of $400 going down. Now, if you add all this up, assets is going to add up to $25,700. Other assets will add up to $21,600. Accounts payable is $1,200. Oh. Huh. Other liability, it's funny, I have a different, my sheet here is different. Common stockholders equity, common stock is 30,000 and retained earnings is 16,100. So, if you add this up, these two add up to 47,300 and these three add up to 47,300. Look here, total assets is 47,300, total liabilities is 1,200, and total stockholders' equity is 46,100. If you add up those two columns, common stock and retained earnings. And 47,300, let's see here, 47,300 equals 1,200 plus 46,100, because liabilities must always be equal to assets must always be equal to liabilities plus stockholders' equity. Always. All right, let's take a break. Here, transaction 6 affects 3 accounts, and it's referred to, it's called a compound entry. Oh wait, no, I'm sorry. Transaction 6 is 2 accounts. Sorry, I'm looking at the wrong thing here. Transaction 6 affects 2 accounts, and it's referred to as a double entry. Transaction 7, that's over here, has 3 accounts, so it's referred to as a compound entry. All right, and we're going to continue with activity 6 in a few minutes. Let me just show you something here. This is QuickBooks. This is actually New Cash. It's an open source accounting program, and you can see here my list of accounts. These are the accounting records for, Beta Alpha Psi is the Accounting Honor Society. So these are all my different accounts that I have. I have no liabilities. Oh, I have these 2 liabilities here. But these are all my accounts. And all of these things, these were different pieces of information. And then what we have to do, obviously, is we create financial statements from it. And a program like New Cash will do all the different things that you would do in, say, a program that you need to do to keep records. It doesn't do everything, but it's a pretty good program. So I just wanted to show you that as we're going along.